What happens to depositors when banks shut? The Reserve Bank of India on Monday said it cancelled the license of a Lucknow-based bank called HCBL Cooperative Bank as the lender does not have adequate capital and earnings prospects. Consequently, the bank ceases to carry on banking business with effect to the closing of business on May 19th, the Reserve Bank said. The Commissioner and Registrar of Cooperatives for Uttar Pradesh has also been requested to issue an order for winding up the bank and appoint a liquidator. On liquidation, every depositor would be entitled to receive a deposit insurance claim amount of his or her deposits up to 5 lakh rupees from the Deposit Insurance and Credit Guarantee Corporation, DICGC, and that's where the problem begins. In February this year, the Reserve Bank also imposed strict curbs and effectively shut Mumbai-based New Era Cooperative Bank, barring it from issuing loans, accepting new deposits, or permitting withdrawals for a 6-month period. According to the Reserve Bank, these measures were taken due to concerns over that bank's financial stability and liquidity. An issue that crops up in the case of New Era or other banks that have been shut down is the smooth recovery of depositor funds, which is actually never smooth. I reached out to advocate Shirish Deshpande, chairman of the Mumbai Grahak Panchayat, considered one of Asia's largest voluntary consumer bodies, and who has been campaigning on behalf of New Era's depositors in general, and about how the DICGC should be doing more to give back depositors' savings because they have the money.
Well, depositors do not know exactly where do they stand, because earlier, as per the first communication of Reserve Bank, they were supposed to pay these 5 lakhs, up to 5 lakhs to the depositors by 15th of May. Now they have again extended that date by another 3 months. By giving another 3 months, that is up to, I think, 15th of August or something it will be. Now, while extending the date, or even while announcing the first restrictions, on 13 February, Reserve Bank has not cared to take the depositors into confidence. It is just a mere circular that there are some irregularities, and in the depositors' interest, the following restrictions are being imposed, that from tomorrow onward you cannot withdraw your deposits, blah, blah, and all that. Even in the second extension also now, the one which has come just a couple of days back, that is on the 15th of May, Reserve Bank has not taken the depositors into confidence by saying as to what are the steps that are so far taken by Reserve Bank for revival of this bank or any merger plans or the proposals and all. And straight away now they are actually deferring this payment under the DICGC Act, which is supposed to be in 90 days, 3 months. Now they have deferred it. Again, Reserve Bank doesn't think it fit that they owe an explanation as to why this extension is being given. You see, the people are put at tremendous hardships. These are their hard-earned money. There are n number of senior citizens whose livelihood is depending on every month income that is getting from their fixed deposits and other schemes and the saving bank account and all. Where do they go? Now, all that they have so far allowed is only 25,000, not even 5 lakhs. 5 lakhs is the limit that is up to which they will give it eventually by August end now, I suppose. So this is not the way the regulator has to act. A regulator must realize that the entire banking system operates on the deposits of the depositors. And if you don't care for them, it shows a very bad picture, you see.
Right. So, in terms of the modus operandi of the regulator, isn't this standard procedure for most such cases where banks, for various reasons, including fraud within the bank, have been asked to stop business or cease business?
Yes, in fact, if this is supposed to be the standard procedure of Reserve Bank, then what is required is revisit the standard procedure because it is painful. You see, I believe that High Court and also the National Consumer Commission has passed several strictures against the Reserve Bank and made suggestions. In fact, even recently, while extending this date in New India case, Reserve Bank has said that in case of distress in the emergency and all, if you want the money, okay, you come out with this document, that document and all. Actually, this practice itself has been deprecated by the courts, and still the Reserve Bank is, it seems, not in a position to learn anything from this.
Right. So, in the case of giving out funds from the DICGC, I mean, are the funds not there, or is it there but not being dispersed for other technical reasons?
I don't know. In fact, DICGC is flush with the money. If I can quote certain statistics to you. Firstly, when the DICGC Reserve Bank is a part of that also, as you know. When they're saying that they are going to give 5 lakhs, this is where we must first understand that DICGC collects from the banks, all banks, whether private, public sector, cooperative banks, any bank which is a registered bank as a banking company, they collect the premium on the entire deposits lying in the bank at the end of every 6 months. Now, if you are collecting on the full amount, where is the justification for giving only 5 lakhs? And which was earlier, it was only 1 lakh till about, I think, 2021. So, when you're collecting the premium for the entire amount, it doesn't look nice. In fact, just imagine if the same practice is to be adopted by any private insurance company, what would you call it? It would amount to an unfair trade practice. It would amount to unethical practice. Now, coming to the amounts that DICGC has, I can tell you the total amount of claims that they have settled so far since 1978. Mind you, since 1978 till 2024, the total amount that they have claimed and disbursed to the depositors is only 16,326 crores. I repeat, 16,326 crores. As against that, I will match what is the collection of DICGC only in one financial year by way of a premium for year 23-24 is 23,879 crores. So match these two figures. Total claims settled so far 16,326 crores, and every year or last year that you have collected the premium alone for only 1 year is 23,879 crores. Now the total deposits that DICGC has, the figure is astounding, 1,98,763 crores. And do you know the simple interest that they are getting every year on this is in the range of about 11,908 crores. And last year, 23-24, they have collected about 13,947 crores only by way of interest. So there is no shortage of the funds. Only thing what is lacking is a willingness on part of the government, on part of the Ministry of Finance, on part of the Reserve Bank of India and the DICGC authority.
Okay, so I don't have them on on this discussion. I mean, just to sort of sum this up, I mean, but the money that the DICG is sitting on, it is part of a consolidated balance sheet somewhere, isn't it?
Yes, in fact, I must clarify that all these figures that I have extracted and quoted now, they are from the DICGC annual report itself. So they are uncontroverted figures. Okay, so these figures cannot be questioned or doubted about it. So the source is only authentic source.
Okay. Coming back to the amount that is being dispersed or should be dispersed to depositors, assuming, let's say, all the other procedural issues are taken care of. For example, in the case of the bank in question, there was fraud that in turn led to the problems. Now, what in your mind should be an ideal dispersal figure? If you're saying it went from 1 to 5 lakhs, what should be the...
No, you see, there is no question of ideal figure. The figure is my every rupee, your and my every rupee has to be insured and it should be fully secured. You see, I would have said that this is a matter of policy had it not been the case that they were collecting the premium for the entire amount. But today, they have been collecting the premium for the entire amount, so they have no other option. Mind you, if they were to collect the thing from up to 5 lakhs, then it's a question that, okay, instead of 5 lakhs, why don't you make it 10 lakhs or 20 lakhs and all? The fact that you are collecting the premium on the entire amount, you have no option but to secure the entire deposits and pay back the entire deposits. That's what it is.
And where do things stand today in terms of the DICGC or the Reserve Bank responding to these requests? And how do you see the path forward?
You know, we have made it quite public in the media and all that thing, but there is not a smallest denial from Reserve Bank or DICGC. Worse still, we wrote letters to the Reserve Bank of India and sought the appointment. Now, this is the consumer body. This is perhaps the largest consumer body in India, Mumbai Grahak Panchayat. And Reserve Bank officials do not find time to give us, to meet us, and explain what the whole issue is about. The same question that you are asking me, where does the matter stand now and all, we as a depositors representative entitled to know that. Now Reserve Bank doesn't care to even give us the appointment. Why? What are they shying away for? I mean, we don't understand this.
Right, Mr. Deshpande, thank you so much for joining me.
Thank you.